switch it up. Switch it up like it's about to go up, break them like internet. Goofies wanna run up, we leave them in the dead. You know how it go down.
You say, okay, I have a lot of money, but you have no money unless you take profits.
When the first ever spot ETF was created for gold 10x.
And the only thing I really knew was Bitcoin at the time, so I just invested very heavily into that. Rode it all the way up.
What that taught me was that I need to be self-sufficient.
Even the creators have said it's going to be the predecessor of CBDC.
In fact, we about to go up like.
Nate, got anything to add there?
Hey, you're muted.
I believe.
Oh my gosh, I'm muted. Wow. So yeah, this actually bounces directly from what I saw in the aftermath of immediately upon launch, right? I started seeing people, the bridge was stuck and all that, blah, 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 right? And then people started asking questions. Oh, now what do I do? Now what do I do? It's like, okay, well, first off, you're going to want to get some pulse, right? And what I started learning is how people don't really plan ahead. Because for me, it was simple. It was like, oh, it's easy, you know, just throw it all into Pulse, right? Immediately upon all these coins that I got free copies of that are basically worthless, just throw them all into Pulse. That's going to be worth something. Start from there. I thought that was common sense, but then I started realizing and learning the lesson that that's not common sense, apparently. Figuring out like a plan and how to do things, that's not common sense. So ultimately what I started learning is that for the most part, people tend to panic. They're like, oh, what do I do? Ah, like that, right? And you're sitting here, yo, calm down. Shh, stop, you know, take a step back, calm down. Here's what you need to do, right? Oftentimes, I think the most important lesson for anybody watching this to take out of any experience they have in PulseChain currently is as soon as someone says, it's going to pump to the moon, you don't go, oh, I got to go buy it now, right? Don't do that. Because I spent 2 years doing that and I got wrecked. I almost gave up entirely on crypto. If it wasn't for, if you look at last week's episode, my history, right? I gave it one last chance and it was like, okay, now I'm around people that I can rely on, right? I'm around people that can help me. And I myself am trying to learn. Too many times people hear, oh, it's going to pump to the moon. Oh, I need to go buy it now, right? Stop that. Like, oh, it's going to pump to the moon. Here, let me take a look at it real quick then. Let me spend an entire day. Oh, ooh, right? Looks like a scam coin, right? We got a few fluffy slippers going on over here, right? It's that type of thing where you're like, okay, well, maybe I'll just calm down. I'm not going to panic. I don't like this project. And that's originally what I did with Pepe, actually. I actually got burnt on this one. This was the literal opposite, right? For me, I saw Pepe literally within the first couple of minutes of it launching. And I was like, oh, Pepe, I should throw some money in it because, you know, funny, haha. And I was like, you know what? I really don't have that extra dry powder right now. My bags are packed the way that I want them to. I am okay with just letting this one go. It's a meme coin. There may be a pump, there may not be. Don't know. It's probably going to zero. And it turns out it's actually a really is one so far this year. It's been one of the best meme coins to get into. Okay, I missed that boat. Am I mad over it? No, because I stuck with my plan. I stuck with my risk assessment, which was my bags are packed. I'm happy enough. I don't have any extra dry powder to just yeet at the wind, right? And so, am I going to like, it's Pepe, it's gonna pump to the moon? No, I'm cool, bro. I'm cool. I'm happy with what I have. Yeah, but you could 100x this in the next 2 days. Well, good luck with that, you know? I think people panic way too often, and there has been no better example for me than this launching of PulseChain. And then to have people come back and be like, oh, but it's dropping, it's dropping. Yeah, it's an L1. What else were you expecting? This is what happens with L1s. They immediately pump like this, drop down. That's when you buy, by the way. You just back up the truck, right? Yeet all your money at it. And then next thing you know, during the bulls, there it goes. So it seems pretty standard to me. I can't believe it was a great lesson in exactly how people react, like normal people react to the markets. And I can't believe that I was one of those guys for literally 2 years, and I could see why I lost all my money.
Yep, I had a similar experience with Pepe. You know, I saw that it like 100x in a day or 2 days, and I was like, missed the boat. And guess what? It like 900x after I said that I missed the boat. Am I kicking myself for not hopping in? No, honestly, because I expected it just to die like every other meme coin out there. Was I wishing that I had put my money in there again? Not really. I mean, because I've lost enough money making bad decisions that I'm going to play it safe when it makes sense to play it safe, and I'm going to take a scratch ticket here and there when it means take a scratch ticket. So, okay, let's see, Jeff, you got anything to add real quick?
Yeah, I just kind of super quick wanted to touch on something that literally you and Nate said. I know we did a lot of talking about ratio trading. I just want to be very specific. Like, I hate trading. I would not advise to trade. Do yourself a favor, don't trade. The only reason I did it is because logically I said, okay, here's EHEX, here's PHEX. I guarantee they're going to seesaw for a little bit because people are not going to decide which one, and people are going to go back and forth. But all in all, like, I just don't trade. Y'all talk about PayPay and chasing coins, like that's how people get burnt. And I'm not saying don't trade because I'm smart enough to figure that out. I learned because I made the mistake. I thought I was slick and I would take Ethereum and, oh shit, Bitcoin did this. I'll trade it back to Bitcoin and back to Ethereum. And then for like the next week, I'm like, oh my God, the price is never going to go back down or back up, whichever way I was swinging it. And I was going crazy when I stopped trading, set a DCA and did it. Like, I don't even care. Like, it's so much stress free. Like, you could take the extra 5 or 10% I would have made from that stress and have it. Like, I don't want nothing to do with it. But like, I just like the whole DCA approach, dude. Like, that's the best way. And I'll never forget, I heard it one time. I can't remember who said it. It might have been Benjamin Cohen, honestly. I think it was. But he said, I think it was along the lines of, bears over time, they sound really smart in what they're saying, but it's the bulls who get rich because they're buying. And if you are a believer that it's going to go up, then honestly, there's no such thing as a bad purchase. I mean, right now, if you're buying, like, if you believe it's going to go back up, which I sure hope you believe, because if you don't, then you're in the wrong, I'm not going to say industry, wrong word, but you're in the wrong sector. But yeah, I just don't trade. I mean, I'm not going to tell you what to do. You want to trade, go ahead. But like, I don't advise it because I got burnt on it.
Yeah, it's a good point, Jeff. And I think, like, we're talking about risk management, which I mentioned earlier. When people trade, they generally get wrecked. They really do. And what we mean by that is it's really challenging to understand a market if you're a small player, that the people that are moving the market have a lot more money and a lot more opportunity to. So you're almost guessing at what other people are going to do. And so it was different a little bit for PulseChain early on for us, because again, that money wasn't really in the market and everything was just going crazy. And we were watching it every minute, every second of every day. And we really caught the patterns very early on. But good point. We don't recommend doing anything we're talking about on this show. We're just giving you our experiences, and please don't take it as financial advice. So Jay, want to close out this topic? Thank you.
Yeah, brother. As far as lessons learned, I think probably one of the biggest takeaways from being exposed to a brand new ecosystem from ground zero and seeing all the volatility, and like Josh said, right, he had a lot of plans going into it, and a lot of those plans went out the window. I think one of the key takeaways for me was being adaptable, right? There's probably going to be very few times that you're going to be able to get into an ecosystem like this on day one, and to be able to be in the middle of all that volatility, you have to be adaptable, right? You have to be able to pivot on the dime and act when your plans don't go, it doesn't go as planned, right? Josh talked about how for a few seconds, right, a 30-second time span, he saw the ratio between Pulse and Pulse X go 1-2. I remember you, Brendan, specifically telling me that you were hesitating making that trade when you also saw it, right? And why was that so unexpected? Well, we didn't expect the ratio to get that close to each other on day one, but we saw it, right? And unfortunately, because it came from out of left field, you guys hesitated and you missed a little bit of that, right? And how long did it take for it to come back down? It came close back down to that 1-2 ratio, right? And it's hovering around like 1 to 2.5, 2.7 recently. But for the most part, we didn't see that ratio for a very long time past day one. And so if I learned anything from being exposed, day one, it's definitely be adaptable, right? And the great thing about that lesson is that kind of bleeds over into all other aspects of the market, right? Not just within PulseChain. You have to be adaptable when things go as planned, right? We were talking about Bitcoin. I was having a conversation with a client earlier before we hopped onto this call, right? And he was asking me, hey, what made you decide to throw in to empty your bags when Ethereum hit around I think it was around 1600. It went close to 1600, right? Like, how did you know that price was gonna start pumping from there, right? Well, what I did was I took all of the variables that I was considering in the market, and they happened to tell me the price was going to go up. I just happened to be correct, right? It could have done the complete opposite, right? And my plan would have gone completely out the window. And if that happened, I had to be adaptable, right? And I also had to be willing to live with the decisions and the consequences from those decisions, right? And so, like I said, that skill, it bleeds on into other aspects of the market, right? Not just within PulseChain, and you know, if and hopefully it bleeds into other aspects of your life as well, right? Being adaptable, being able to pivot on a dime, create a plan B on the spot when things don't go the way that you're expecting it to. So that was my key takeaway from that experience, at least.
And let me tell you something, Jay, and I'll tell you right now, Brendan can back me up with this because, you know, it's about to be kicked back over to him, but it was a legit fear. It was a fear when I saw that ratio. I literally felt fear. So yeah, you have to be prepared. You have to be prepared for every single scenario.
Yeah, and just to take that one step further real quick before we switch to the next topic, but most people that we heard from said that when this launches, everyone's going to be going into Pulse, and so PulseChain is going to drive real quick. So the ratio to Pulse X is going to be, well, it started out 1-4, okay, 1 Pulse to 4 Pulse X. That was the ratio when the platform launched, and we were, and I don't want to say some people in the market were expecting that to go to 1 PulseChain to 8 Pulse X. I heard people even say 1 PulseChain to 12 Pulse X is very likely. Okay, so when you hear that, and then it goes not up from 1 to 4, but down from 1 to 2, you're like, wow. Like literally you stop in your boots, you're like, okay, what am I doing now? What is my plan? I didn't expect this. And yeah, I paused. I didn't pull the trigger right away. Did pull the trigger when it came up a little bit higher. Unfortunately, missed out on that. But again, I wasn't gonna pull the trigger without having a plan, right? I wasn't going to FOMO into that 1-2 because I honestly didn't know where it was going to go next. And so I missed a play, but I was happy that I already had a plan and executed that plan, and didn't make too big of a mistake. First, I'm going to go Jay here. Jay, go ahead.
Yeah, it's funny. It's funny how you use that example. I also wanted to bring up another example that people are probably going to be familiar with. Remember how everybody was saying that it might take a little bit for the Hex Spear to reach parity? Well, I mean, you can go and look at the charts and see exactly how that did not play out how everyone was expecting it to play out. So I'll leave it at that.
Well, actually, Jay, don't leave it at that. I actually want to ask you a question, because a lot of people were saying don't buy EHEX because PHEX is going to keep moving. I don't know about you and me, but I know that a few of us in here were buying EHEX when the ratio PHEX to EHEX was 1.8. We were swapping PHEX to EHEX. What happened after it went from 1.8? I know we're talking about ratios now. We don't want to planning to talk about ratios now, but we're just talking about ratios. So yes, it was very close, right? 1-2, 1-3, 1-1, 1-4, and then people are starting to dump into PHEX, right? PulseHex and PulseHex, sorry. And it's just driving that ratio up. So now it hits 1 PHEX to 1.8 EHEX. What did we do? Did we buy into the fear and pump all of our Ethereum hex into PHEX at that time? No, we did not. We swapped all of our PHEX into EHEX, and we said, let's wait for that parity, baby. After that, it dropped back down to 130. We de-risked, and we made a lot on that ratio trade. Jay, do you just want to touch on that just a little bit more before I kick it over to Nate?
Yeah, sure thing, brother. I would say that's probably one of the better arguments for being competent at TA, right? Because I know a lot of people, especially if you're not really like mathematically inclined, or you don't like looking at patterns, you don't like looking at charts, that it could turn you off. But the reason why I always encourage people to learn that skill is when opportunities like this present itself, you're not going to be in the dark, right? When we started, the ratios really start to grow apart. Like, for example, there was a point in time where I saw one PHEX would equal where in the first few days where 1 EHEX would give you 4 PX, right? That was a crazy ratio that some of us made a trade into, right? And so the reason why I encourage learning technical analysis is you'll be able to see some of those patterns even if you're just looking at the charts, right? And so when it comes to ratio trading, look, me personally, I'm like Josh. I kind of when it comes to trading, I like to make as minimal trades as possible, right? But when it comes to the hex pair in particular, I'm okay with ratio trading. Why? Well, because I like both pairs, right? And so if I get caught on one side of the trade and the price starts to run on me in the other direction, well, am I okay with holding a little bit more PHEX than EHEX and vice versa? And the answer to that question for me was yes. And so that's why I was comfortable making some of these ratio trades. Now, if you're somebody who is not being comfortable being stuck on the other side of the equation, then you probably want to take a hands-off approach when it comes to ratio trading, right? You just want to hold the coin and wait for that price to go up. But as far as what we were doing during the first few days, yeah, a lot of those ratios are very advantageous. And even though the ratios are a little bit tighter, right? They've kind of stabilized. And we'll probably talk about this a little bit later on in the show, right? I can show you guys later some of the patterns, especially with the hex pair. It's very distinct, right? And if you the pairs can go anywhere between 5 to 10, sometimes 15% up or down, right? In both directions. And so if you're paying attention to that closely and you're taking a portion of your bag and allocating it to ratio trading, you're able to grow that bag without any new capital, right? And that's what a lot of us have been doing. I've pretty much doubled my hex bag doing the ratio trades, right? And I've been able to funnel some of that extra EHEX and PHEX and funnel into Pulse. Once again, no new capital, right? And so I encourage everybody, learn, like, don't be a maxi on the other end, right? Don't be a TA maxi, don't be a fundamental maxi, don't be an on-chain maxi. Learn all of these skills. That way, when these types of opportunities present itself, you're not left in the dark.
Yeah,
Right, so
good
that's-
point.
yeah.
Yeah, sorry, didn't mean to cut you off there, but really good points. If you're going to ratio trade with a small percentage of your bag, right? Don't ape in. We may have aped in here and there because we felt very comfortable about things. But again, like Jay said, we were comfortable about whatever coin we ended up with. We think is going to be good long term. So we felt like the risk for us personally wasn't as strong as it might be for other people or on other chains. Also, the reason that you can ratio trade only expecting a 10 or 15% return is because the gas fees are so damn low. You know, on Ethereum, your gas fees are going to cut into your profits so much, then a 10% ratio trade really doesn't mean anything in the end. So, Nate, anything you want to end us with this? I know we ended this segment a couple times, but if there's anything you want to just add here real quick.
Yes. So this had to do with when you're sitting there trying to figure out and plan out, hey, what's the expectations of, like, say, gains and things like that, right? Well, that you were talking about a little bit before. Basically, the best possible way that you can say expectations, right? The best possible thing you can do is, quite frankly, is say, hey, I've got multi-layers of, I'm satisfied if it hits this particular expectation of mine, right? I personally have 4 of them. These 4 include the low end, like, it wasn't as good as I was hoping, but I'm still happy enough with it, right? Okay, cool. So you got that lower end, right? Then you got the expected version, right? Like, this is what I'm figuring. And personally, like, I would prefer to try and keep it down, right? Try and keep it down so that way you're not disappointed, right? Keep lower expectations so that way, you know, you're not thinking, I'm going to go to the moon, and right. You want to keep something that is at least on planet Earth, right? And so that's your expected. And then you have like your, oh, if everything goes really good, it's going to be this upper one up here. All right. And then you have your to the moon one. Like this is your hopium that you look at, like, there's a possibility. Oh my God, it could be this, right? And that's the one that you look at, like, when things are really bad in a bear and you're watching things go down, you're like, but there's a very real possibility that this moon can actually happen. Now, I'm expecting it here, but there's a real possibility that this moon can happen. In fact, am I really mad that it even just hit here, even my lower end, even my low end? Am I mad that it hit that? No, because I'm still up from that lower end, right? It's as simple as that. That's all I had to comment on. I just wanted people to kind of understand that and try and figure out how they can formulate that for themselves, you know?
Yeah, thank you for adding that. I think this is an important segment, this little part of our podcast today. But I just want to reiterate that it's very risky what we're doing in this space. And it's important to understand how much risk you can personally take on and how much maybe you should just buy and hold. If you don't know what you're doing, just buy and hold. Don't try to be smarter. Don't try to outplay the market because you're just going to get burned, right? So playing it safe long-term is going to make you money, in my opinion. It's not financial advice. So that's a completely fine play. Completely fine play. But if you buy and hold, you got to sell at some point because you can't buy anything with crypto. Yeah. Jay, what do you got?
Yeah, I just wanted to kind of add on to what you said about the risk management, right? We might be talking about ratio trading here, but I was talking about this with my client earlier. I told him, look, the only reason that I'm able to ratio trade this is because I'm paying very close attention to these assets, right? I've got alerts set. I have the luxury of working from home and being next to my computer all the time. And so if I see that ratio, that alert goes off, I can make that trade really quick, right? For the most part, a lot of people are not going to be able to do this, right? Because you need to be paying attention very closely to these assets, especially when it comes to assets like this that are highly volatile, that can go anywhere from 20 to 50% swings on the day, right? And if you're not on the ball, you're going to get trapped on one side of the trade that you might not be able to live with, right? And so for the most part, people are the best practice for folks is that if you want to be hands off on crypto, buy Bitcoin and buy Ethereum, hold that and wait for price to go up, right? You can invest in some of these other tokens like the Richard Heart ecosystem, because we know that they're going to do well in the future, right? But if you're going to engage in very risky behavior like ratio trading, like day trading, you better be willing to live with the consequences of those actions, because if you are not, that's how people get liquidated, and that's how people basically fud themselves out of this market, right? And it's unfortunate because crypto is the best performing asset class of all time, and will be the best performing asset class of all time. So you can quote me on that, but that's all I had to say when it comes to the risk management and the ratio trading. So
Yeah, that's just an opinion. That's not financial advice. But I do want to say that even for myself, honestly, I've cut down on my ratio trades because the amount of percentages that I can make on those swing trades isn't always worth it when I have to be at work for 8 hours. When I can't be on my computer, when I can't be on my phone. Those early days, I knew that I had to be on my computer, so I made the sacrifices to be there. And I was lucky that I have a flexible schedule sometimes as well, but that's not always the case. So if you can't be in the market and you can't be paying attention all the time, like Jay said, just buy and hold something safe, in our opinion, safe, Bitcoin and Ethereum. But okay. So the next thing is we've talked a little bit about techniques and strategies, PulseChain's marketing, partnerships and innovations, but we're going to deep dive onto that a little bit more now. We're going to try not to reiterate too much of what we've already talked about, but those are the things that we really, really want to talk about. We're at those. So we have, I think, just a few people we want to hear their thoughts. And Jeff, I think you had something to say on this topic. What do you got for us?
Yeah, between you and Jay, y'all basically just said everything I was gonna say. So if I say it, it's gonna sound like a broken record. So I'll just make it really quick. Yeah, I'm done ratio trading. There won't be any more done by me. Is there money still to be made in it? Yeah, sure. But you're not gonna see the crazy swings, in my opinion. But like you were saying, you had your computer with you. I took like 5 days off of work so I could stare at my computer all day, all night, constantly. Like it was bad. My muscles probably like atrophied a little bit. So now it's pretty simple. There no swing trading. Now basically you got yield farming, but I'm not even gonna go into that because that's Nate's field. I'm not gonna waste my breath, so he can make me sound like an idiot because he's gonna do way better at it than me. So I'm just gonna DCA. What I was doing was a 30-30-30-10 ratio of Pulse, PulseX, PHEX, and then 10% EHEX. We'll go into why 10% EHEX later on, but that's what I was doing for a while. Now I've switched it up a little bit. Now I'm 40-30-15-15. That's Pulse, PHEX, PulseX, EHEX. That's just what I'm doing right now because that's how I've come up with a few strategies why. But yeah, as far as my strategies go, play it safe. I mean, I know you are talking about you have to decide when to sell. I haven't sold any profit in a year and a half. None, not $1. Because every time I do, and I look at Bitcoin's price and I see it's not over 69,000, I'm thinking, man, this $100 is going to be worth a lot more. So I've just been working a ridiculous amount, but I don't care. I'd much rather just absolutely just grind right now so it pays off in the future. So that's my advice. don't trade, buy crypto, and just don't sell for at least. I mean, not financial advice. I won't be selling anything before I see Bitcoin crack its previous all-time high. That's just me, but that's all I got.
Yeah, and previous all-time high of 67,549, if my memory serves me correctly. But yeah, no, it's a good point. There's nothing wrong with that strategy. I know that our strategies probably are slightly different, and that's okay. We have all come to our strategy in a well thought out, well planned scenario. And people are saying, "Oh well, PulseChain's gone up 30% in the last 2 days. I can't buy it now, right?" But this is a layer one. 30% is nothing. We're looking for 100x. We're looking for 10x, 100x. We're looking for really large gains like other layer ones done. Now, that doesn't mean it's going to happen, right? There's a lot of risk involved, but you're not going to gain 100x on an asset if there isn't substantial risk on the other side. And you have to understand that, right? With risk comes opportunity, and with gains comes risk. And that's really what you have to understand. If you want to put your money in a bond and have almost no risk, you say, wait, what do you mean almost no risk? Everything has risk. You just have to decide what that risk is, and you have to find that. But yeah, bonds are pretty safe, but you're not really going to make any money. Are you even going to make more money than what our inflation is currently? Maybe not. So you're really making anything at that point, right? I don't know. If you're not making money higher than the current inflation rate, then you're not making money. Okay. That is something that you really need to understand when it comes to market analysis and when it comes to where you want to put your money. That's the bottom line. So I'm going into this a little heavier than I wanted to, but I think it's really important to think about that. Jay, I see you smiling over there. I think you got a little bit to add to this topic.
No, as far as incurring risk, yeah, I mean the guys in the chat are talking about it right now. It's look, if you don't want to incur the risk, you also have to live with the fact that you're probably not going to get the same reward, right? Well, why do some of the highest paid people in the world, why are they entrepreneurs? Well, because they incur the most risk, right? If you don't have a regular 9 to 5, you don't have a consistent paycheck coming in every 2 weeks. You don't have insurance through your employer, right? You have to take care of your own taxes. You don't get a W-2, right? When it comes to entrepreneurship, a lot of it has to do with sales, right? Sales is what? It's an eat what you kill type of environment, right? And so you as an entrepreneur, somebody working in sales, maybe incur that kind of risk. But if you produce a product or a service that is highly valued and it's highly scalable, well, you also get that kind of reward, right? That concept carries over to the space in crypto. If you don't want to incur a lot of risk, you buy the assets that have been here for a long period of time, right? That's Bitcoin, that's Ethereum. But you also have to be willing to live with the fact that you might not get as many gains if you invest only in these two assets. You want more X's? You're going to have to start coming down the ladder of higher risk assets, right? Like these L1s. As far as it doesn't, how we might love PulseChain and the ecosystem a lot, but we know inherently the type of risks that come with investing in assets that are still pretty young and that are not well known, right? And so that's all I had to basically add to that, right? It's you have to be willing to incur the consequences associated with getting involved with higher risk assets, right? But obviously that comes with its rewards as well, right? So
thank you. Josh, anything you want to add? I know we haven't really touched on marketing or partnerships or things like that, but we're all involved in some of those things. So if you want to just take a little bit of this away for us.
Yeah, for sure. And that's pretty much what I was going to touch on. I mean, look, when it comes to marketing, you have one of the most cultish like groups that are pretty much behind this project. You know, all the Richard Hart Maxis out there, all the Hexicans that are out there, they're probably 90 to 95% of what's behind this coin. So you think of the marketing and you think of all the hype that they do. I mean, you can literally, not now, don't pause the show now, but after the show, if you just type in PulseChain in your phone on YouTube and you just scroll, you'll be able to find nothing but videos. If you go on Twitter and you just type in hashtag PLS or PLSX, what was PulseChain was trending on Twitter for multiple days, I believe, right around the launch time, just from all the marketing, all the hype around it, and all the OG hexagons, all the Richard Hart maxis that they were fomenting at the mouth when this thing got launched. So that's the marketing, and that can roll into the partnership, because what I'm seeing a lot of is those OG hexagons are trying to find ways to plug into the Richard Hart ecosystem now. They're trying to plug into PulseChain, come up with different projects. We got Portal X, or am I saying that? Yeah, there's Portal X, there's various different types of coins. I don't know so much about them because I'm not as degen as everybody in this group, and I stick pretty much to my investment strategy, but it's not difficult to just go on Twitter and follow Richard Hart, and you'll see all the marketing, all the partnerships and all that stuff. So there's a very strong momentum. There's a very strong backing behind this coin. There's a very strong backing behind the entire ecosystem. So, that will pretty much cover marketing and partnership. I mean, this thing's not going to go away, and this thing's only going to grow. And luckily, we're lucky enough to be at the ground floor of this thing. We're lucky enough to get prices below SAC rate, well below SAC rate on different coins. So that's all I got to say on that issue.
Yeah, and I think one of the things that you mentioned there is there's already a big community that was built in Richard Hart's Hex ecosystem prior to the launch of PulseChain, right? So one of the important things that you have to ask yourself when you're getting into a project is, hey, what is the community like? Are they building a community of believers, of people that actually care about the coin, want to see it grow, or are they just gonna, sell at the first sign of something happening? But nonetheless, without buying and selling, it's important to have a group of people that believe in a project. And there's already those people in this project, in this ecosystem prior to it launching. Now, as it gets to grow, in a bear market, nobody's paying attention, right? As we get into a bull market, this platform is now starting to get a lot more people and a lot more eyes on it. And so that's where the opportunity of growth really comes in. I'm not going to tease my the end of this show, because episode 3 is going to be fire. I just want to let you know that. So make sure that you listen to the rest of this show and you listen to the teaser at the end for episode 3. But I just want to let you know there's a lot of opportunity coming here in the next year to 2 years. So don't miss the boat. Okay, so next topic we want to talk about, how do you get PulseChain? If you've never purchased it, if you didn't sack for it, if you didn't get in early, am I too late? Well, first of all, no, you're not too late. We're here to help you navigate the space, which I said earlier. I'm going to try not to say that N word too often, because I've already said it 5 times, and 5 times is too many. But I will find a new word to say instead of that. But yeah, so we're going to help you figure out how to get through the space. So that's first. We're going to talk about tokens, how you set up a wallet, how you just do some of the basic things that allows you to get some skin in the game, right? Because if you don't have skin in the game, you don't have any opportunity to make gains in the future, right? So you got to get into the game first, and we're going to take off from there. Safe storage practices, making sure that you are locked tight from a security standpoint. These are important things, right? And not everyone's going to feel comfortable right away, but we want to get into a little bit of this because we think it's important. And we have our good buddy Malik, who's going to take the first lead on this this topic. So Malik, take it away. Malik, you there? We can't hear you.
Did your mic break again, bro?
Oh, there we go. No, there's like there's like 4 different settings. Okay, so I wanted to share my screen real quick. Here we go. Okay, so basically I wanted to show people how to get set up. So the first thing you want to do is you want to set up your MetaMask. That way you can actually input the chain from PulseChain. I guess I didn't actually search up PulseChain. So this is the easiest way to get the, so it'll actually take you here on the PulseChain website. So you can just go straight to the PulseChain.com website. You'll get the RPC right here, which will put into your MetaMask, which will allow you to actually get onto the PulseChain and interact with it to use PulseX, the exchange, or just to buy PulseChain. It'll have, you know, a couple little things down here if you want to read some more about it. It's really not much, but you know, it's good enough. It does its job, and it helps get new people onto the ecosystem the quickest by having like just a central hub to get what you need. So you'll go to MetaMask, you know, metamask.io. You want to make sure you go to the official website and not to any other website. You can search in the Chrome App Store, as well as the, I believe, Opera, Brave, and Firefox. But I just typically go straight to the official website because that will give you whatever browser you're using's native link, and then you don't have to sift through, because I think there is a fake MetaMask on the App Store. So there, you want to make sure if you are downloading from the App Store, you're using the most liked one and the one with the most ratings. However, just to avoid all that entirely, I just go straight to the official MetaMask website, and I just never even have to worry about it. So after you've set up your MetaMask, you will get a little pop-up. You'll open it up here. You'll set up your wallet, your seed phrase, all that. You want to make sure you write that down on a piece of paper and keep it completely offline. You do not want any of your seed phrases or passwords to be stored online for your crypto devices at all, ever, for any reason. Never. It just never. There's no reason ever. And a lot of people don't really seem to get that. They seem to use, you know, easy to guess passwords, or they don't store them properly, or they tell people or don't, you know, it's just stupid stuff. You know, this is your wallet, this is your livelihood, this is your future, this is your investments. Like that, why would you not take the utmost care to make sure that it stays out of, you know, people who would misuse it or take it from you? Like, it just doesn't make any sense. So this needs to be taken with, you know, the utmost care, because we've in the chats, we've seen people get hacked, and we've had to sit there and try and help them be like, well, how did it happen? You know, try and figure out what happened. It's like 9 times out of 10, it comes down to user error. Like, oh, I used a shady site or something, or oh, I used a shitty password, or oh, my, you know, family members might have seen it, or I was using it on public Wi-Fi. Like, it's always something stupid. You know what I mean? It's never like, oh, I was legitimately, you know, hacked. Like, I don't know what happened. I took all the precautions. Everything was offline. Like, it's never that. It's always user error. So, like, when it comes down to it, you want to make sure you're going to the official websites for all of these things, because if you're not, you're most likely going to get scammed, and then you're going to be upset because you lost all your money due to your own fault. So the second place I would go to, following up that, setting up your MetaMask, making sure it's all secure and offline, is either Coinbase or Kraken. Now, to speak on Coinbase, they're going to be fine. You can sign up on Coinbase. It doesn't matter what the SEC says. They're in BlackRock's pocket. Like, the Coinbase is going to be completely fine. It just is what it is. I mean, it was really just FUD from the SEC. I mean, yeah, they do have some insider trading that they've done. Like the Coinbase isn't squeaky clean, right? Like I've never really liked Coinbase because I got into crypto in 2015 or 2017, right? And that was back when it took Coinbase about 2 weeks to approve you, like just to approve your identity. Right now, it's literally like 12 hours and you can trade. No, they made you wait 2 full weeks, if not a month, to approve you back then. Like it was a real big hassle to even get an account. So it's not like they've just been around like pretty much the longest. You know, they were kind of like FTX, where they were around for a really long time, but FTX, obviously, you know the story of them. They didn't. That's why they're not on this list anymore. They mishandled their money and did a whole bunch of shady shit. So, you know, something to watch out for is Coinbase doing some shady shit. But at the end of the day, they are going to be a staple. They're funded or backed by BlackRock and JP Morgan. So obviously they've got pretty much the entire Fed behind them. So this is like we've kind of stated before, the Coinbase is kind of their psyop to see, you know, central bank digital currencies, right? So I don't really use Coinbase that much, but if you just like, you want to have as many avenues open as possible so that if you do need to get money in, and let's say, so let's say we go to my favorite one, Kraken, right? Let's say Kraken's not working and I can't buy from it. Well, I have my Coinbase account set up and they'll let me, you know, onboard $500 or so, right? Like, so it's about having different avenues that you can input money into the system so that if there's an issue for whatever reason, you're not just stuck on one platform and you're just like, oh, well, I can't buy now. And now it's up, you know, my investment's up, would have been up, you know, 20x if I had bought. Because I mean, it's just, that's the game we're kind of playing here with the volatility. That's why we've all kind of stressed we need to be there when it happened, when PulseChain dropped, because if it didn't, you know, you're not you're not gonna make it. That it is what it is. Like speed kills. So third one is Gemini. I know I didn't really talk about Kraken, but it's the same thing as Coinbase. You just go through, sign up, you know, click the sign up button, it'll load up, put in your name, email, date of birth, blah blah blah, all this stuff. It's called KYC. And what that does is it basically, they just get your information so that they can track you if you do anything illegal or that they don't want, basically. And I mean, that's just, unfortunately, that's just what we have to do in order to even partake in crypto. It really defeats the purpose of being decentralized, but that's the government's just not going to let us get away with it. So we kind of just have to do it. So basically, once you finish setting up your MetaMask, once you set up your Coinbase account, and you've got your onboarding ready to go, then you can, you know, throw on like $20 of Ethereum or something. I wish I had some Ethereum to show you, but I don't right now. All my money's already allocated, so we're gonna have to use our imaginations. So you want to go over to, well, you'll buy Ethereum on one of these 3 exchanges, right? You'll buy Ethereum, you'll get your Ethereum, you'll send it to your MetaMask wallet, okay? Once it's in your MetaMask wallet, then you can go over to the PulseChain bridge, right? And by this point, you should already have, you know, your Ethereum in your wallet. It should be switched over to PulseChain or Ethereum, so you can bridge in to PulseChain. But now, hit the Ethereum, you'll hit whatever amount you want. You know, say I got 1,300 whatever Ethereum. It's not going to be as accurate because I'm not connected, but it will take a 0.3% what's the word, fee out of whatever you're bridging in, and then you'll get the PulseChain version, right? So let's say, I believe you can just switch straight into Pulse. Maybe not from here, but from this one. So this is another way. I haven't personally tested it, but I've heard people use it. They said it's pretty good. So basically, you literally just send your Ethereum from you connect your wallet. You'll send your Ethereum, right? And it, you know, post your address, which will be your MetaMask address, which will be the same address as your Ethereum address. It's kind of weird because you'll think it'll be different addresses, but they're both ERC20 standard basically, or I guess PRC20 standard if you want to call it that on PulseChain, but they're both they're the same thing. So you'll just add in the same address as your basically what you're sending it from your MetaMask, and then within a few minutes to I'd say a few hours, you'll probably have your native Pulse in your PulseChain. Now, the one thing I did check this before my last purchase just to see kind of the fees because I wanted to kind of test stuff out. You might want to check stuff beforehand and like kind of cross-reference because there is a little bit of arbitrage between each one of these on-ramps for fees, right? So this one is a little bit more expensive. So like let's say I wanted to get 1.3 whatever Pulse on PulseChain. Forgot what it was, 6.9. Oh no, Pulse. ETH and Pulse. So wrapped ETH. And then I need to swap them. Now it should give us a fake price, but might not because I'm not connected. Yeah, so it's not giving us a fake price, but so basically it'd be a little bit less. I'm not sure the percentage less, but it does take out a little bit more chunk from, I'm assuming the auto routing because it has to actually transfer the funds between networks. And that does actually cost a little bit of gas. So you're not going to get as much if you were to just do that rather than just using the native PulseChain. But that was basically all I had for my part in setting this up. So I'm going to go ahead and pass it back to Brendan and stop sharing.
Yeah, thank you, Malik. So just to let everybody know, at the bottom of this video in the description, you'll be able to see the Twitters of each of us. So if you want more information on ramping, if you have questions, feel free to reach out to Malik. Or if there's something that you have a question on that any of us talk about, we're here to respond to you. We're here to give you free information. Again, nothing that we say should be taken as gospel because, we're navigating this space as well. Oh, I said it again, but doing the best we can. So the one thing I do want to say is on those platforms, there's different ways that you can load US dollars, right? Fiat onto those platforms. So for example, Coinbase, you can link your bank account and you can send money or you can buy crypto, buy Ethereum right from linking your bank account. The thing is, sometimes they put a hold on your money, right? So you have to be careful about, okay, if I want to buy today and I want to get it to my MetaMask to be able to then get some PulseChain or get some Pulse, can I do it today? Or are they going to hold my money for a week before I'm able to transfer it off of Coinbase to MetaMask or off of Gemini to MetaMask? So really you have to do some research to see how long the hold times are. Personally, for me, if I use a debit card on Coinbase and I link money up using a debit card, there's 0 hold time. I can take those coins that I purchased and I can send them right off to my MetaMask, and then I can bridge them over to PulseChain as Malik was talking about. But if I use my attached bank account, they actually hold my money for about 8 days. 8 days is eternity in crypto. I know people in other chats we've talked to, they're saying, hey, we're at the lows right now. I want to buy, I want to ape in, I want to back the truck up. But Coinbase is holding my coins, right? So they're struggling. So please, I know I've made the mistake a couple of times where I'm waiting for my money to become released. And so I found ways to essentially get my coins to where I want them to be without any hold times. And one of those ways for me personally is the debit card option on Coinbase. I've used Gemini in the past. I don't use it a lot now, like Kraken. I've used some other platforms that I don't use a lot now because I don't like so much. But yeah, so a really good dive into that, Malik. Thank you. And we're going to keep rolling because this show's going long. So I think we're just going to hop straight off into yielding strategies. So we talked about a little bit about ratio trading, but there's another way to increase your coins without as much volatility. Still some risk involved, right? Anytime you're yielding more than a bond in the United States market, which is right pretty much less than your inflation rate much of the time, you're going to have some risk. So we are going to roll this into our money printing expert, Nate. Let's get it.
Hey, I like being money printer expert. That's awesome. I'm like, I don't know, Jerome Powell over here or something. I don't know. Got my own printer going on. Let's go, man. All right. So yeah. So basically, like, I'm one of these guys, I work a lot, right? I don't have a lot of time to sit at the computer and sit there and be like, look at the exact everything is going on, right? I'm like, okay, I need some kind of passive income. So that way, well, as much passive income as possible. That's quite frankly the ifs, ands, or buts, right? And so basically, farming, LPing, right? Liquidity providing is the main sources that I always go for. Just yielding in coins, right? I want coins, give me money. I'm going to give you my money so that way you give me money, and then I use your money to buy hookers and blow. That's the entire idea, right? So let's go. All right. So I do know that
not financial advice, hookers and blow, not financial advice.
What are you talking about? It's fully joking. But no, so here's the thing. PulseChain has, and specifically Hex in general, has always been one of my favorites when it comes to any kind of LPing of any kind, right? Or any kind of like yielding. For the most part, like Hex itself started off as the world's first ever CD, like bank CD, right? It's all about stake it for a long time, pull it out, free money for you, then you can restake it again, keep it going, right? That was the basic idea of Hex in general when it first started. It's like, okay, now there's a lot of other things going on. I know Phantom is another one of my favorite ecosystems that does great when it comes to yielding and all that, but we're focusing on PulseChain today. So here's something really, really, really cool, right? Now, originally, we're starting off in Pulse, okay? So Pulse X comes out, we got the farms. The farms are basically you put in a liquidity pair, which is ultimately like, say, Pulse X. That's the favorite one, right? It's just / Pulse X. What ends up happening is you go 50, 50. Cool. So $100, $100, bam. Easy as that. And you get the APR percentage. Basically, the APR percentage has been kind of low on those, but a lot of people have been aping into it. You get what's called the incentive token back out of it. The incentive token is simply, hey, you put your money in there and here's your reward. Here's the incentive token. It's as easy as that, right? There's a lot of other ways to do it though, okay? So when one of the newer ones that have just recently come out, like just brand spanking new, is called PHUX, and or my favorite word in the world, bucks. Right? I love their name. It's a part of the PH ecosystem. The PH ecosystem has been quite amazing, to be frank. They've created their own Aave, which is simply a banking system, aka people borrow money, right? And in borrowing that money, just like borrowing, you have to pay back with interest. That interest goes to the liquidity providers, right? The people who have thrown money in and is sitting there. They've got the Fame token going on, which ultimately is a leverage program, same sort of deal. As soon as they leverage out Hex to, E-Hex to go through the floor 30 times, guess what happens? It goes up, bam, we get that money. Liquidity providing in that gives us that share of money. And then Fux is just a simple, same thing as P-Hex technically, but it's a little bit different. It's not it's not directly competing. It's actually helping for the reasons I'm about to explain here, right? So ultimately, PulseX is kind of like your Uniswap, right? It's the main base for anybody who's like smaller, like, hey, I got $1,000, I want to swap into something. Boom, go over to P-Hex, right? Or sorry, PulseX, swap it out, good to go. Okay, what if you have like $1 million to swap out? That's gonna be a little bit different, right? Because that's when numbers start getting really big and you start really looking at things, right? Once you start swapping $1 million, like if you're swapping $1,000, your slippage is like 0.002%, 0.001%, whatever, right? It don't matter. Who cares? But once you start having $1 million, your slippage, which is the amount of money in liquidity providers that ultimately is going to be, it's going to cause the price to go up and down, right? That's what slippage ultimately is. If you drop $1 million and you're going to create a gigantic candle, what's going to happen, quite frankly, is, well, you're getting a slippage of like 10% or something. That's ridiculous, because that slippage percentage out of $1 million, even if you have 1%, what is that, like $10,000? You have to, ultimately what that means is you have to pay $10,000 to swap your $1 million. Who the hell wants to pay that? So ultimately, the problem that Fux is helping PulseChain do is it's deeper liquidity providing, right? Deeper liquidity providing through multivariance liquidity providers. And the result of this ultimately is going to be basically you swap $1 million, you're paying $2,000 instead of 10,000. I don't know about you, but I think I might take that. I just might, right? It's something as simple as that. I'm trying to keep it as simple as possible, quite frankly. But yeah, so there's also something else that, like, say, Fux really does really well, and this is really awesome. So on PulseX, you got the liquidity providing, which ultimately is taking the fees and spreading them out for whenever anybody switches anything over on PulseX. And you get a portion of those fees, right? That is your yielding, right? Now, here's the deal. If you're getting all of the big whales over on Fux instead to be swapping, where do you want to be providing liquidity for that passive income? You're going to want to go there, because all the big money is going there. You got all the smaller guys doing more transactions on PulseX, but you got bigger transactions on Fux. So here's the way that they do LPing now, which is really, really cool. They do it by providing multi-coin type of deals, right? So instead of going to PulseX and saying, you know, I want Pulse and PulseX, right? Instead of doing that, what you can have is, like, say, the Richard Hart Maxi, right? You got Pulse, PulseX, Pulse Hex, Ethereum Hex, right? Inc, right? Incentive token. You get them all and you throw them all in there. Here's the cool thing about it too. You get an even amount of them all. Now, obviously, you can run into problems with what is called impermanent loss, right? The idea of impermanent loss is simply, let's pretend, make it simple, right? Let's pretend you go into, you know, USDC and Pulse. All right, USDC is always at $1, okay? Pulse is now, it's dropping below $1. Well, it sure is a good thing you got in there, because you're going to hold Pulse for a long time. So you're like, it's fine, right? And then this one, you're technically you have more bang for your buck at this point in time, right? Now, here's where impermanent loss comes. Now, Pulse is going up. let's say it goes way up, right? It's like way up here. Okay. Yes, you were yielding that entire time, but wouldn't you have made more money by just having this USDC put into Pulse and then gone up with it? Wouldn't that have been easier? Like, not only easier, but more money technically. You lost gains by holding it in this dollar amount while Pulse is like fucking flying to the moon. Okay, that's impermanent loss, right? Now on 50/50s, it's really easy to do that, right? Because you don't know the future. I would like to think I know the future, but I can only make an educated guess, right? So basically, it makes it a lot easier if you do something like what Fux has, where you got multiple coins, right? The reason why is because you've only got a few coins here and there, right? Like 20% RH maxi, right? You got 20%, 20%, 20% all the way across the board. Okay, now instead of a full 50% on something, plus, not gonna lie, these coins tend to go up and down together, which is one of the secrets, by the way, a little bit of alpha for you guys on how to properly farm and or liquid LP, right? I'm just gonna say LP. Basically, yeah, you're gonna want everything that goes up and down together. Now, let's go ahead and pretend you're like, okay, let's do an LP for Pepe, Pepe, and Pulse. Okay, 2 years down the road, what do you think is going to do better? Do you really think Pepe is going to just do this forever? I can tell you right now that Pulse is. It's a brand new L1. It's only going up. What's Pepe going to do? It's going everywhere. It's a meme coin, right? The amount of risk you're taking on impermanent loss is ridiculous, right? So there's a lot of things you need to think about when you're going to go farming, LPing, and things like that. Here's the basics of it, right? I work a lot. I don't have time to sit on the charts and do a lot of ratio trading and things like that. In my brain, I sit here and say, what is going to allow me to make money while make me money or more money while I'm working, making money, right? What's going to continually make me more, right? Farming. I want a money printer. Okay, I want, right? Print me that money, right? Let's go. So what I do is I look at whatever coins are going to go up together. I stick my money in there, and I just farm. I let it come out. I let it print more for me. Just keep going, right? That long and simple. What you're looking for are coins that are going to go together. Pulse X tend to go together. The worst that we've ever seen it so far is 1 Pulse to 4 P or Pulse X, right? As of right now, as far as Hex goes, we got I think we're at the worst currently right now, which is for one, yeah, it's for one E Hex, it's 1.5 or 1.6 P Hex. That's the worst we've had. They're still going up together. Like one's a little bit higher, right? But they're still kind of going up together. Your impermanent loss is not going to be a lot. In fact, your yielding is going to overtake that and you'll make more. It's the entire point, right? Now, if you're doing something like Pepe, you should probably get a brain scan. But yeah, that's kind of the long and short of it. I do have some very specific strategies and types of LPers / farmers, kind of what they do, but we'll kind of get into that in a little bit here. I do believe actually a couple of other people have some other things to say about this, so I'll go ahead and throw it over to them.
Yeah, thank you, Nate. That is a lot of detail, and we'll get into more of these types of things in future episodes. But what it boils down to is, are we just going to sit on our coins? We're going to find a way to increase those coins, right? Again, we're not looking always at what the dollar value is right now. We're looking at how can we increase our coins so that when the market becomes very bullish, right? It's been slightly bullish over the last week. when it gets into a very high end of the bull run, all of those extra coins that we've earned from doing nothing or through hard work are going to give us all of that extra free money, right? And so there's multiple ways to compound your coins. We talked about ratio trading, which we don't always suggest. Another safer way is to choose safe pairs, like Nate said, that are gonna move together, so that you're gonna reduce your impermanent loss and still gain percentage on your money. Not 4%, but like currently Pulse and PulseX, they're moving very close together. That's still a 21 point something percent APR. And so, yeah, I am going to roll this over to Jeff. Jeff, you have a little bit to add here on the Hex, EHEX, PHEX situation before we roll into the close?
Yeah, sure. Super quick. When we were going over strategies, I forgot to mention, when Nate was just talking about yield. So one of my yield strategies was, so I'm still doing my DCA, but as far as all my yield, I'm actually taking that and straight up dumping all that into P-Hedron and P-ICOSA. That's my DCA is higher than my yield. So I figured, yield, free money. As long as I don't have an impermanent loss, I take that yield, top that off, get it back to where it was, and then dump in the other little altcoins in the system that I like. And something else about a strategy I wanted to touch on was the whole PulseX single-sided staking that I've been wondering about since way before this ever went live. And it's going to be curious to see where it goes, because if the APR is too high, then to an extent, then people, I mean, why am I going to stake Hex if I can just single side stake PulseX? So, I mean, theoretically, the APR has to be lower than the APR of staking for a year for Hex. It has to. I mean, if it isn't, then there's no point. Like, where's the risk? So I'm really curious to see what that's going to be. But only time will tell. So I know you wanted to touch on the whole EHEX versus PX thing, and I went back and forth about this so many times. I mean, I still do. That was kind of why at the beginning when I was doing the ratio trading, I said, you know what? It's the same coin. It's two different networks. If one goes up, okay, boom, higher yield on the other side. I could buy some, get higher yield. Oh, never mind. Other side up, back and forth, back and forth. But then the more I started to think about it, I mean, even Richard himself, basically he says, oh, like, yeah, he thinks the market will decide like where we'll like logically go. He thinks people are going to want to go on the new network. And I mean, he said that. And the more I think about it, the more I'm starting to agree. Now, I know people are going to say that he said he doesn't want to see cheap Hex anywhere, but that doesn't mean that it's going to hit parity. Like, just because you have EHEX doesn't have to be cheap. EHEX can hit $1, but just because it's not cheap doesn't mean Pulse Hex can't hit $5. Just because one's cheap doesn't mean the other one can't be even. I'm sorry. Just because one is expensive doesn't mean the one can't go up exponentially more, unless, liquidity bonding and all that stuff. But the more I kept thinking about it over and over and over, was everybody saying, oh, EHEX is his baby, he came up with this. But I think we all know that Richard has an ego. And I think for his ego, he doesn't want to say and have to hear, oh yeah, you had a coin 10,000x, but you did it piggybacking on somebody else's network. He wants to hear that he came up with the best layer one. He wants, all that glory and stuff. So, I mean, I don't think he'll ever come out and say, oh, I think PX is better. But I personally think, and I could be completely wrong, because I still like EHEX and I'm still buying it, and I'm going to continue to buy it because I think it's dumb not to. I'm playing it safe. I want both. But I think, to him, I think he wants, of course, like, okay, you know what? We have this problem with EHEX. Gas fees are too high. So you know what? I'm going to spend all this time, go through all this ridicule and criticism to come up with something and create it that does the same as the one that was already creating the problem. Then what's the point? But there might be an aspect that I'm not looking at, that I'm not realizing. And that's the reason why I'm still buying both. I would really hate for one to blow the other one out the water and not have any of it. So EHEX is never going anywhere, in my opinion. Whales are going to protect their bags. It's that simple. They are not. They don't want to lose money. They're not in this game for that. And plus EHEX has lower liquidity, so it can put a lot higher too. There's so many variables. I really don't know. But the more I think, I kind of am starting to think as EHEX as being ETH Classic and PHEX as being like current Ethereum. And you got your old ETH OGs that still swear like we want proof of work, blah 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 blah. And you'll have some people that do that. Like I said, the whales, they want to protect their bags. But I'm really curious to see where it goes. But I honestly think PX until sharding comes out, I think PX will come up.
All right.
Am I super loud?
Oh, it just twice it really quickly for like a second just blared really loud.
We got the Hulk coming here. Holy shit.
I haven't moved or a muscle or changed my tone or nothing.
Man, I think it's just I think it's all that electricity from the DJ Roundtable.
Yeah,
probably some microphones.
It gets sense of my excitement about PX.
Anything else you wanted to add, Jeff? I think that was all really good information.
Honestly, I think it's just this community itself. As far as just like y'all were saying earlier, you have people that were giving, not lending, giving PulseChain to other people so they would have gas. You don't see that in other communities. Like just because of that, that's why I'm so big on this ecosystem. And I guarantee you, Richard wants this to be Richard's ecosystem. I don't know. This is just the beginning, man. I have a buddy who I got to buy Hex, and I explained to him the whole PulseX, Pulse, free copies. He completely forgot. There's going to be so many people that don't even know what this is down in the future, are going to be like, wait, I got free money? Like, it's not even close. Like, it's still unheard of. So that's going to keep getting bigger and bigger and bigger. So just give it time, and I think this ecosystem is going to destroy it.
Perfect. No, I appreciate that. Really good points there. There's a lot more that we can talk about on that, and I'm sure we'll touch on it in the future. We are really getting close to 3 hours, so I want to finish this up. Jay, I know you haven't said anything in a while. Do you have 30 seconds or a minute? Anything you want to add, or you good? You're good for the night? Just in general.
Yeah, I just wanted to add on to what Jeff was saying about the community kind of there's this divide within the community right now about whether to invest in PHEX or EHEX, right? I think the community infighting is to be personally honest with you, I don't think that's a good look, right? And the reason that I give to most people is that you have to consider the fact that Richard Hart and this ecosystem, it's already pretty much the black sheep, right? Or one of the black sheeps within the cryptocurrency community, right? Everybody calls him a scammer. Everybody calls him a fraud. Everybody thinks that Hex itself was going to zero. We're already, as a community, we're pretty much on the outskirts already. And so when PulseChain released and then you had all of this infighting, well, that's not a really good look. A lot of people are trying to logic it, right? If you have like for example, you were in the camp that says, look, we should transfer all of our economic capital from EHEX into PHEX, right? Look, from somebody who's a logical actor, right? If you were to have a conversation about that with me and you, we would say that generally makes sense, right? And you can make a good case for it. But you have to realize that the overwhelming majority of the people within the space act on emotion. Right? Everybody that exists in the middle of the bell curve, retail, they act on emotion. So what's going to happen? They're going to see if it were to happen that EHEX rugged and went to zero and everybody transferred over to PulseChain. Right? Somebody who's brand new is going to see that. Well, they said that Richard Hart was a scammer, and one of his coins went to zero. The original coin went to zero. Who's to say that the other coins aren't going to go to zero? And somebody who's logical can give you all the reasons why it won't go to zero, but somebody who's coming into the market for the first time, somebody who's not as logical, somebody who's going to act on emotion like the rest of retail market, is going to see something that went to zero and think, Well, that's a stigma against that ecosystem, against that founder, right? What is Hex supposed to be? It's supposed to be a store of value. Well, what store of value do you know that's going to zero? The dollar. But but you know, like, jokes aside, right? If you create something that's supposed to be a store of value and it went to zero, right? Then it's no longer a store of value, right? The optics isn't as good. So we know that Richard is not a scammer, but if somebody sees that a product of his went to zero, they're going to think that's a scam. Well, how can I trust this ecosystem? How can I trust this founder? Right. And somebody who's a logical actor can give you all the reasons why it won't, but somebody who's new to the market and who's going to act on emotion, they're not going to see it the same way, right? The optics are bad. Right. And so this whole debate between eHex and pHex, to be completely honest with you, I think it does more bad than good, despite what arguments you might want to make for one side or the other. Right. It does more harm than good. Right. Because as a community, you're supposed to be standing in solidarity. Right. Especially a community that's already exists on the outskirts. Right. And so if people from the outside looking in see all this infighting, well, do you think that's going to attract them to it or not? Right. And I think people that make the argument that eHex is going to zero, I think have a very small understanding of overall human psychology. Right. And what Richard Hart is trying to accomplish within this ecosystem. Right. Richard Hart does not need to be rich. He's already rich. What he wants is he wants respect, he wants admiration, and he wants to create a legacy. Right. And he does not want to create a legacy where one of his coins went to zero. He wants to be able to brag about every single one of those. Right. And so is he going to allow the firstborn child to go to zero, to die? It's not going to happen. Right? It's not going to happen whatsoever. Right. And people that don't understand that don't understand Richard Hart. Richard Hart doesn't need more money. He wants to create a flawless legacy. He wants to be able to say, I told you so. Right? What's going to happen if Hex goes to zero? Hex and Ethereum goes to zero. Well, then well, guess what? Just proved all the naysayers right. Oh, I guess he was a scammer. I guess it wasn't a store of value because it rugged. And so I think that's something that people really need to consider, right? If you're voting for one side against the other, and for one side to be completely eliminated, I think you're missing the point, right? It's completely going over your head. So that's all I had to say on that. I know we're going a little bit too far on time, but just my 2 cents on it.
Yeah, it's important, right? If eHex goes to zero, then no one's ever going to want to buy pHex or any other Richard Hart coin, right? So if one goes to zero, probably, in my opinion, they're all going to zero, which is why I don't think any of them are going to zero. That's really what it boils down to in a nutshell. So before I close and give a little teaser for next episode, which is going to be really good, so stick around for a few more minutes. Josh, any last minute things you want to add? It's been a while since we heard from you as well.
This was a relatively thick topic that we covered. There was a lot of content. So this definitely might be a video that needs to be watched again in the near future. But it's important, it is a brand new L1, so it needed to be covered. But it's definitely a lot of thick content in here, and definitely looking forward to next week and the shows that are coming up, bringing you guys something that might not be as content filled, something that you guys will be able to lightheartedly enjoy maybe a little bit more. But overall, I think it was a great show, and I'm excited to hear the tease for next week.
Thank you, Josh. Thank you, everybody who participated in the show today. We don't just have one or two people talking or giving their opinions, but we have a really wide breadth of people on this show that come from a lot of different backgrounds, that have a lot of different expertise, and we all want to share all of that individual knowledge with all of you. So for those of you who stuck around to the end, this is a lot longer than the average show is going to be. But as Josh said, there's a lot of content to get with, and we realized very early on that we want to be able to give you all of the content without rushing through the topics, and therefore the show had to run a little bit longer than we might normally want. However, the information here was excellent. If I do say so myself. So again, watch it, rewatch it, and understand if some of these topics are a little too in depth and you're not fully understanding what we're talking about, go to YouTube, start watching videos on these words, the keywords that we're talking about, the key terms. And in the future, we are going to be creating a chat for people to join and ask questions that they aren't familiar with. So we will be answering those questions in a chat for free in the future. That's not ready yet. We're just trying to pump out as much content as possible. But really, we want to be here to help you guys get through this market and understand the different aspects. Again, we're not experts. We're not providing any real financial advice. We're just giving our experiences and our thoughts as we do our best to understand the market in these new platforms as well. So this is a very heavy topic. Next session, we're going to talk about something really unique that I've been thinking about and researching a lot. And I know that Josh has researched this quite a bit as well. And we call it the potential for a perfect storm within the macro crypto environment, right? So the first thing that we have is the recent news of a potential Bitcoin spot ETF. Okay, what is that really going to do to the market? Currently, just right now, just today, we are sitting at a market cap of about 1.2 trillion. Okay. Now, what was the high market cap of crypto when we hit the top of the bull market? 3 trillion, exactly. So we're not even 50% of what the top of the previous bull market was. Okay, so if you're saying, hey, is it still a good time for me to buy, even though we're starting to go up, even though we hit lows? Guys, if you expect us to hit all-time highs in the future, if you expect us to go from 3 trillion to 4 trillion or 5 trillion or more, then this just normally, just organically, okay? Then that's incredible. Now think about Bitcoin spot ETF. How is that going to add more money into the market? Okay. Now, I don't know if you know this, but the top 10 asset management firms in the United States manage $40 trillion. Just the top 10 in the United States. Okay. So this is some of the stuff that we're going to get into in the next show to explain to you that this perfect storm in crypto could be much sooner than previously anticipated. And so you got to be ready to pack your bags and hop on this train, or you might miss out. Okay. That's just the bottom line. We could be soon seeing the largest growth of the crypto market in the history of the crypto market. And if that happens, watch out. Watch out. So Bitcoin spot ETF. What happens if then we get an Ethereum spot ETF? Crazy things to think about. And honestly, that's just a couple nuggets that I'm showing for the next show. We have a lot more that could symbiotically just come together in a weird perfect storm scenario that literally could drive this market to places that are unfathomable to think about, right? So 2x market cap from all-time highs is conservative, right? Is very low. So think about what the bullish scenario could be. On that, I'm going to end it because I have a lot that I want to talk about on this topic, but I don't want to go for another hour and a half because we have a whole show to cover next week. So I want to thank you all that joined us tonight. Thank you all that stuck around here to share your thoughts, and hopefully this content was helpful for you. Like, subscribe, shoot us messages, follow us on Twitter, find our handles in the description. That's it for the night. Degen Roundtable is out.